Welcome back to the Daily Journal. So let's review the 2 a.m. Power of 3 on the 4-hour charts. So this is the day that we're looking at. And as you guys know from our previous videos this week and the week before, I'm looking at this as a market maker model, which is to say that price has originated here, dropped down into this previous monthly low, and now I'm targeting the previous monthly high. So the reason why I believe it's going to continue to distribute towards the upside, we've accumulated long positions on the way down. We've swept the previous month low in paired orders and discounts. We've then had a change in the state of delivery, which confirms to me the shift from accumulation to distribution on the part of the market makers. So they are counterparties, and so they've been accumulating long positions, and now they are distributing their long positions as the market requires bars, right? They need buy side liquidity. Of course, the market makers who were accumulating longs had that liquidity, right? They absorbed the sell side liquidity, and now they are distributing buy side liquidity. So where do I think this is going? Right at the top. And my drawn liquidity is this. My first initial drawn liquidity is this. Now, what I like about where this day ended is that it stopped just below, right? That's inducement. If we begin to get a sell-off, because this high is also swept, right? It didn't close above. Let's just zoom in. Okay, it actually did. Okay, fair enough. So we'll have to see how next week trades. We do have FOMC on the Wednesday. So, I mean, you've got to look at all of this trendline liquidity. And all the buy side liquidity has been swept. I mean, yes, we closed above that, but it's not very convincing. And yes, this is my drawn liquidity, but for me to go long, I'd prefer to see some of the sell side liquidity get taken, if not on NASDAQ, on the correlated pair being ES, possibly even YM. If this can hold up and just kind of consolidate, take out maybe one or two of these. But I mean, look at this, right? This is just setting a huge sell-off, setting up a huge sell-off. So, you know, how we typically, this price action isn't best. You know, typically with the market maker model, you'll get an expansion and then you'll get, you know, a shallow retracement. This is a classic silver bullet. That's fine. But usually you get expansion, then it'll consolidate, a shallow sweep of liquidity. That's just generally speaking, right? But with all the sell side liquidity building up into FMC, to see these highs get taken out, I'd like to see these lows, you know, the sell side liquidity get taken out first. So yeah, this is really interesting to watch. We'll see how this plays out. Of course, one of these were swept with ES. Let's just bring that up. So ES did sweep one of these previous day lows. I vaguely remember one of these lows being swept. Interesting. Maybe I'm just losing my mind. So you can see that this high over here, it had already been taken out. So ES has taken out some of this liquidity, but look at this must be a new day opening gap. And you can see here again, inducements. So this is the drawn liquidity on ES. This is the drawn liquidity at the short-term drawn liquidity. This is where ultimately where price is going. Okay, so that's neither here nor there. The point is, you get my bias on the daily, right? So going into the session for this day, you know, this is my bias, but I wanted to see sell side get taken out. So on this day, my bias was bearish, at least for the London session. So this is this is where we're at. So I'm just going to rewind the clock. It's the 2 a.m. candle that we're looking at. Okay, so this is the previous day high. Also sweeping the previous candle high. Now going into that session on the 15 minutes, here is your 2 a.m. And here's the London Open. So since price had expanded in Asia, I was looking for price to consolidate, albeit not as long as it did. So I was sitting in the session and I was happy to wait for the London Open since price had expanded into the session and we had made these relative equal highs. So I was looking for that to get swept. And if we had swept that without taking out any of the sell side liquidity, I was bearish, right? And what I was looking to trade into, since I'm bullish high time frame, right? If price trades back into this, then I'd look for longs. But since price traded up, then it's just a kind of a sweep of external range liquidity here, and then a rotation back to the internal. And of course, we got bullish order flow, so I'm expecting that to continue. And I remember that's my main high time frame drawn liquidity on the daily. So I'm looking for London reversal to trade back into this zone, and look at all these trendline liquidity on the sell side, right? So it is these relatively lows that I was targeting, right, as my low hanging fruit. Since I want to look for longs here, and this is just a counter trend trade, I'm not trying to catch a full delivery. So as price traded up, once we got this change in state delivery here, I went short. And I was expecting so that's where I calculated my risk initially. And the reason being is that if you look on the 5 minutes, yeah, this is the reason I actually got it initially. Because when you look at the 1 hour, well, I'm trading the 4 hour power of 3. But when I saw this setup, right, that's accumulation, manipulation, and distribution, I dropped to the 5 minute charts. And we had got this change state of delivery here. And then, of course, we had this fair value gap. So if I'm delivering from that fair value gap, then it closed below, that is what I then got in, or where I got in. And that was where my stop loss was, right, just above that. And there it is, a nice solid. I actually ended up adding to the position, I think over here, or a little lower. So it did come down, but I'd higher capital risk to offset the lower risk to reward, right? So I sat in that for ages. Now bearing in mind my trades typically last, a few minutes, 5, 10, 15, 20 minutes, maybe 30 minutes at the most. So yeah, this was a very difficult trade to hold, and my trading session typically goes until 5 a.m. because after that time I'm then expecting a different phase of price, right? So if you look at the 4-hour charts, it would have opened up a new candle here. At this point I'd put my stop, where was it? Let's go to the 15 minutes. And what I'm going to do here is just flip this because I can see it so much cleaner on the bullish side. And I just simply do this, right? You can see here, for example, you can see this is how I was actually looking at it. I was looking at that linear reversal, and I can just see things a lot clearer. And this is why I actually have two. One is for bearish, one is for bullish. Okay, so there's that 3 hour, that 1 hour. So on the 15-minute charts, let's just move this to the side. You can clearly see here's your change of state of delivery, right? Also, was looking at this. This is actually where I got, with the 5 minutes, I looked at this as the confluence, and that is actually where I got the entry on the 15 minutes. And so this is where I was aiming for, right? Just the top of this 4-hour fair value gap. Solid trade. And so I was expecting a pullback, and I was happy for this to come down into this inversion again. I was happy for these relative lows to get swept. And once that had a bounce there, I was looking for this, this inefficiency, this wick to be respected, which it did. I then had moved my stop loss to that points. Now at this point my entry was a little higher because I'd added over here. Or I think it was in here. So I remember I got that 5 minutes, 5-minute entry, and then added here with that 15-minute change to that delivery. So when price had come down, if we respected that, I'd moved my stop basically to the 0.5 of that, just below it, and went about my day, came back, and I was stopped. You can see here is the entries, and there's the stop out. So it played out, but it took 5 hours to play out. I mean, as I said, my trades typically last, and yes, this is on a 15-minute chart, so it can take longer, but I was looking for a faster delivery, and yeah, this is just chopping around. But here's the thing: the market was waiting, because once we got to 6 a.m., look how it chopped around still for ages, right? So this is until 8:15 when price finally delivered, and then at the 8:30, it just blasted off straight into these this fair value gap, and also went to standard deviation. So yeah, it would have been an absolute stunner. Look, in hindsight, I still would have taken my profits here because of the bullish order flow. In this instance, it's the bearish order flow, right? This is just a counter-turn trade, in my opinion, and that actually ended up playing out, which I'll include in the next video for the 10 a.m. continuation and the New York Open. So catch me in that one. Like and subscribe. I'll see you guys then. Cheers.